Electric cars seem cheaper at first glance, but the real cost comes from hidden fees, charging, insurance, and depreciation that nobody talks about. The real question isn't the sticker price, it's the monthly cost you live with, including loans, interest rates, insurance, and long-term ownership expenses. Most buyers focus on fuel savings, but they ignore financing costs that quietly increase the real price of owning an electric vehicle. Higher car prices mean bigger loans, and bigger loans mean higher interest payments over time, especially with today's auto loan rates. Even a small difference in interest rates can cost you thousands of dollars across a 5-year car loan without you noticing. Now let's talk about real-world driving, because efficiency on actual roads often looks very different from what car ads and brochures promise you today slowly. Hybrid vehicles switch between electric and gas power smoothly, reducing fuel use while keeping daily commuting habits simple and stress-free for families now. Electric cars feel advanced and quiet, but range planning and charger access quickly become part of your everyday driving routine for commuters worldwide today. For daily commuters, time equals money, and every extra minute spent charging adds a real hidden cost to each busy weekday schedule. Planners everywhere always. Saving money isn't only fuel costs, it's about time, convenience, predictable expenses, and total ownership costs over years of careful planning decisions today. Now let's examine insurance costs, because electric vehicles often carry higher premiums that quietly increase ownership expenses year after year nationwide. Insurance companies price electric vehicles differently because battery damage can turn small accidents into expensive claims faster than traditional cars. This higher risk forces insurers to raise premiums, creating a long-term cost many buyers never calculate before purchasing an electric vehicle. Over several years, higher insurance premiums can quietly cancel out most fuel savings promised by electric car marketing campaigns. Now let's look at public charging, where electricity prices have increased and fast charging often costs more than drivers expect. Fast chargers save time, but convenience comes at a price, and those costs add up quickly for drivers without home charging access. Meanwhile, hybrid drivers refuel quickly and continue driving, avoiding wait times and unexpected charging costs during busy schedules. Time spent charging is a real economic cost, especially for commuters balancing work, family, and daily transportation responsibilities. Now we reach depreciation, the largest financial loss most car buyers experience but rarely think about before signing contracts. Electric vehicle technology changes fast, causing older models to lose value quicker than hybrids with simpler, proven systems. Depreciation hits hardest when technology changes fast, because newer electric models quickly make older versions feel outdated in resale markets. Buyers who purchased electric cars 2 years ago often discover resale values much lower than expected, despite strong initial demand. This value loss matters most to owners planning to sell or trade within a few years, because a lower resale price can erase fuel savings and reduce the equity you expected from your investment. Hybrid vehicles depreciate slower because their technology evolves gradually, keeping resale values more stable over time. Lower depreciation protects your money over time, especially if you finance your vehicle or plan to upgrade every few years. When resale value stays stronger, you keep more equity, reduce total loan loss, and protect your long-term financial position. When you combine insurance, financing, energy costs, and depreciation, total ownership cost becomes the number that truly matters. This financial stress test removes emotion and focuses only on numbers that impact your budget month after month. For buyers with free charging at home or work, electric vehicles can still make strong financial sense. But for drivers relying on public chargers, hybrids often deliver more predictable and safer long-term ownership costs. Stable fuel prices, faster refueling, lower insurance premiums, and slower depreciation reduce financial risk and protect your monthly budget. So the smartest choice depends on your lifestyle, charging access, and how much financial risk you are willing to accept. Insurance costs deserve serious attention because electric vehicles often carry higher premiums due to expensive battery components and complex repair procedures. When minor accidents result in costly battery inspections or replacements, insurers adjust pricing models, increasing long-term premiums for many electric vehicle owners over several years. Those higher insurance payments can offset fuel savings, especially when combined with financing interest and depreciation losses. That's why a true financial comparison must include insurance quotes, loan terms, energy pricing, and projected resale value before making a final decision. In the end, this financial stress test proves that numbers matter more than marketing. When you calculate insurance premiums, loan interest rates, energy pricing, and long-term depreciation, the total cost of ownership becomes clear. Electric vehicles can make sense for drivers with free home charging or short lease terms, but for buyers focused on predictable expenses and equity protection, hybrids often present a safer financial position. The smartest decision depends on your lifestyle, financing strategy, and how much risk you are willing to accept over the next 5 years.